Hi, this is Kristan Erner from the City Savvy Show. Thank you for tuning in. Today I'm very excited to talk to Barry McCullough, someone I've never actually met. I actually have never met of Greybrook. That is the real estate investment side. That's actually three parts, I believe, of a company. And you have a health component, you have a US component. So first of all, who is Barry McCullough? And then we can get into Greybrook.
Sure. So I joined Greybrook about, I guess, 6 years ago now. Previously to that, I was working at the big banks with TD for a number of years. I actually started my career coming out of college in September of 2008. I started as a broker, so probably in hindsight, the worst time in recent memory to start being a stockbroker when the Dow and the market's up and down 900 points in a day. Got out of the wealth management business, I guess, back in 2015-16. Joined Greybrook, which was a bit of a switch coming from a large bank to a smaller private equity shop, but it's been a great switch. I've enjoyed every minute of it.
Did Greybrook find you, or did you find them?
They found me. It was basically me staying in contact with some connections that I had made over the years. You know, the old adage of building your network really kind of paid off in that case. And I was brought on back in early 2016, and then just became a part of the team from there on. Fantastic.
And that's how I actually know Greybrook, is because a colleague of mine did a podcast with one of your partners, Peter, and back in season 4 of their show, and so I was actually intrigued watching both your podcast that you had done with someone else and also Peter's. And so I thought, oh, this is a great subject, especially this time of year when RSPs are flying. So Greybrook, tell me their structure and where they came from.
Sure. Yeah, so Greybrook's a leading private equity firm that really invests in large-scale real estate developments in North America, primarily in Canada and sort of Toronto and the Southern Ontario more broadly. And in the U.S. and some certain markets that we can get into as well. And really, Greybrook started its roots back in the early 2000s. Our chairman was formerly involved in TLC LASIK eye clinics. Was one of the founders of that business. Essentially started Greybrook as essentially a family office. And at first, they were kind of generalist in nature. Investments in technology and healthcare, and logistics, and real estate. And really, over time, kind of saw that real estate was the most kind of repeatable and predictable of the various verticals that they were involved in, and then really kind of just expanded organically from there, to a point where initially it was friends and family investing alongside Greybrook and our principals, to now a point where we're a registered exempt market dealer. They have north of 8,000 clients across 30 plus countries. So I guess it's been almost a near 20-year journey so far.
Wow, and I guess everybody at the office has good eyesight because of LASIK?
You'd think so. I probably do for an upgrade there.
There you go, there you go. And so when we look at Greybrook, how does Greybrook source opportunities?
Sure, it comes a number of ways. I mean, I would say there's usually either our team, our asset management team, which sometimes comes across an opportunity through our network. Could come from our developer partners. We work with about a dozen different top developers in the GTA and in the US as well. And then the third way would be typically through, and this is more of a rare occurrence, but just through a public bid process. So you could have property that's being listed by Colliers or CBRE and get involved in that case. I mean, candidly, that's often the least successful path for us. Often you don't want to be the one that's winning that because it might mean that you overpaid for a site, which we kind of like to stick to our assessed value on a property. But I would say it's one of three ways at this point.
I think I found out today that you were actually linked to Lynx, which is a tribute property being built at Main and Danforth, which Laura knows all about as well. And so that's kind of a great thing to now know that you are attached to all these builders. What are some of the builders that you are attached with or aligned with?
Sure. So Tribute Communities with Lynx obviously is one. Fieldgate we've been involved with for a number of projects, a number of years. Treasure Hill, Marlin Spring, Metropia and Sorbera. In the U.S., we work with a partner called Property Markets Group, or PMG. It might be a little unfamiliar to Canadians, but they're one of the top developers throughout the U.S. In terms of kind of luxury product. We're currently right now doing the Waldorf Astoria residences in Miami with them.
Right.
So it's really a a tight roster of really high caliber developers that we partner with.
Was that Biscayne Bay? I think
On Biscayne, correct.
Yeah, that's on Biscayne, right? So that's a big project. You're North America wide, so you stick with North America markets, and how do you? So we talk about who you're aligned with. How do you make the decision to align yourself with Tribute? You know, these companies, these builders that have a great reputation.
Sure.
Is it by reputation?
That's part of it. Part of it is, we want to find a firm and an organization that really has the bench strength.
Right.
It's not their second or their third condo, but their 22nd or their 23rd condo. In many cases, they're, firms or families that have been around for 10, 20, 50 years in some cases. So the execution and that experience is a critical part of it. Their financial capacity and balance sheet strength is an important aspect as well. And really, it's you want to have an alignment of sort of how you view the world, right? You don't want to be working with a partner that isn't transparent and doesn't share information, because it's a collaborative process.
Sure.
Right? We're actually not just there to raise capital for a deal. It's rather, that's the function at the first part of the equation, but really it's an active co-management of the project for our team as well.
Right.
Part of that is because we want to represent our investors. We report to them regularly.
Transparency, right?
Transparency is key as well. So, there's quite a few factors. A similar philosophy also helps.
Wow, that's amazing. And we talk about transparency because you are a public company, I think, from what I understand.
We have a publicly listed company,
Right.
which is kind of out of that healthcare aspect that you mentioned earlier, called Greybrook TMS.
Right.
But Greybrook Capital is a privately held firm.
Right. And so what I found fascinating is now we can take our RSPs that we're earning very little on, and we can actually get you to invest for us. Is that correct? Or is that a way that we can direct?
You can direct, yeah.
To that. And what is the minimum for that?
Sure. So we raise capital on a per project basis. So you're not investing into a pooled fund of different projects. You would actually kind of pick and choose which developments that you'd like to get a part of. The minimum on any project is $25,000, increments of $100 thereafter. And our team will actually help you with getting all of your investment documents in order, getting your RSP account and so forth set up at our custodian firm that we work with.
Right.
So we'll help handle all that aspect as well.
And so that $25,000, because if you have a couple of $100,000 or $50,000 or $100,000, that helps you diversify
Exactly.
your investing. So that's quite amazing. I think, so the process, if you were to walk me down the process, so then how would I go and redirect my RSPs towards you?
Sure. So as I mentioned, we have a couple different custodian firms that we work with. So
Right.
Greybrook won't actually hold custody to your
Correct.
RSP. It's with a third-party company. But we can help you with getting that, if it's a new RSP contribution this time of year, we can kind of help guide you through that. Or if it's a transfer from an existing RSP account, maybe at RBC or a bank, for example, we can help you with that aspect as well. So it stays within the RSP. There's no withdrawal of it. And then once the funds are at the custodian firm, they're available to be used in any projects that we have.
Right.
We'll typically do sort of 5 to 10 projects per year. So it's not always that we have a few that are open for selection. Sometimes maybe a couple of weeks between
Right.
opportunities, but we'll walk our investors through that process.
So is your rate of returns different with real estate? Like, does it vary from project to project? Yep. Or do you have an average that you work with, benchmark?
Yeah, in terms of the actual rate at the end of the day, it's going to vary because it's really dependent on the profitability of the overall project. Having said that, we do have return targets that we like to see in order for us to actually decide to move forward on a project. Like, quite frankly, when we're underwriting a project and looking at an opportunity, really a small subset of the ones that come across our desk become
Right.
a live project at the end of the day. We want to look at, what are your planning risks? What are your sales risk? What are your timeline risks involved? If we're comfortable with those aspects, okay, can we use reasonable and conservative estimates on budget and revenues and so forth? Can we hit our 20% per year target? That's kind of that last yes or no,
Right.
go no go decision. So, really, at a broad level, they all have to kind of meet that level of profitability for us. And like I mentioned, we encourage our investors to diversify so that,
Right.
Kristan, if you have $100,000 that you're looking to invest, not put it into just one project, but 2, 3, 4 projects, get exposures to different developer partners, different project types, geographic markets. Same reason why you wouldn't just own one stock.
Right.
You wouldn't just have one project.
Right. And you had talked about building a project in Miami. From what I read was you do a lot of purposeful built properties like rental properties.
Correct.
But here in the GTA, you're more focused on infill houses, townhomes, houses,
The whole spectrum, essentially.
The whole spectrum of residential real estate.
Yeah, so it could be a ultra luxury condo in
Right.
Yorkville. It could be an infill townhome site in Mississauga. It could be a large master plan development in Durham. Not so much of a focus in Ontario for rental. Again, that's more of a strategy that we employ in the U.S., whether it's markets like Denver or Miami or Atlanta, for example. But in Canada, in Toronto and the GTA specifically, it's really those various kind of flavors of residential real estate.
And your job, Barry, is kind of interesting because in a market like today's real estate market, resale market, where prices are going up and up and up and through the roof, then there's new home development. There's that avenue, but that's becoming very difficult because we look at Martha James in Burlington, where now that's hard to find anything in.
Yep.
And then we look at RSPs. Now here's another avenue we can take with you to say, okay, we have real estate. Maybe we can take equity out of our home to buy RSPs, to then invest with you. And so that's really, this to me is new light. And I've never thought about this because our clients, we're always looking for ways to build wealth for our clients. And this is something that before we decided to have you on as a guest, it never occurred to me. And so where people are being priced out of the market, which is a lot of people are gonna have that happen to them, this could be your opportunity to buy into the idea of going with an investment firm that has a proven track record, has been around for 20 years, has done quite the journey, and seeing good returns and dealing with good projects. And you're also part of the healthcare industry as well. I believe you have a portion of that.
We do, yeah. It's a small aspect of our overall business. And again, that really is more of a legacy interest from
100%.
our kind of founder days.
Right.
But yeah, our Greybrook TMS, which is trades on the TSX, trades on NASDAQ as well. That's our kind of main holding in that healthcare space.
Right. So really what we're looking at, because I'm real estate, so obviously that's what attracts me to a company like yourself, because you're so involved in so many different projects, whether they be purposeful or end user for new home developments. So the current projects, we've already talked about that. For us, we, again, always try to find ideas for our clients to grow their wealth. And this is just a really great way to build your wealth. And we know that you just can't contact Greybrook to say, or can you contact Greybrook and they will redirect these clients? Because I know there was a contact button on your website. And by the way, if you go to Greybrook.com, you'll find them easily and some of the projects that they do. But I want to swing backwards because we talk about the process and what exactly, and I've asked this before, who are you, what do you do? But your function is vice president, I believe?
Correct. Yeah.
So what does the team look like? So if I'm going to invest $100,000, how is that going to look for me over a 10-year period?
Sure. So you can kind of, as you mentioned, divide Greybrook into sort of two different arms. You have our asset management team, which is really the heart of the firm. They're the ones that are individuals that worked at high-rise developers in the past, or low-rise shops, or former municipal planning specialists, and they're the team that are actually underwriting and determining which projects that we're going to take on as a firm and co-managing them. And then you have the capital markets group where I sit, and really those are the ones that are investor-facing. Each dealing representative has a group of clients that they work with, and really it's helping them again. Make their initial investments. When you're looking at your second or your third or your fourth project, seeing how that might fit within your portfolio. Maybe it might be a little bit of duplication in terms of market or developer, so it might not make sense. But really, that's sort of the first step with any client is to get in contact with one of our capital markets team. Again, if you mentioned, you can go to greybrook.com and reach out, and we'll get in touch. But from there, it's an ongoing relationship, right? So our projects last from 4, 5, 6 years or longer, and really it's to a point where investors will get invested, and then the projects start to turn over and reinvest, and really it's an ongoing relationship that we seek to build.
So this is probably the worst question that I could ask you, and I ask everybody that sits beside me is, what is your forecast of the Toronto market?
Sure. I think anybody that has seen what the market's done in the last 18 months to 2 years, where it's going up 10, 20% per year, depending on the market that you're looking at, that's not sustainable by any stretch. Anybody that tells you that it is it's not really grounded in reality. I think if you look at, obviously the big concern looking out 6, 12, 18 months is where interest rates go. The other side of the equation is you have to look at the lack of supply that we have, how difficult it is to solve that lack of supply in the short term, and the persistent demand that we're going to see. Right? I think what you saw even last week, the government announced even higher immigration targets than were existing previously. Like 2020 was a funny year because borders were closed for most of the year. Right? And they still brought in about 180,000 newcomers to Canada, which was short of their sort of 340,000 goal. But what you saw them do was sort of move the goalposts even further for the next 3 years to about 1.2 million people. And then last week they announced targeting about 450,000 per year by 2024. So I think you're going to see this tension between affordability and rates versus lack of supply and persistent demand. So my forecast is probably a couple points per year maybe. Pretty flat. I don't see it necessarily pulling back or dropping sharply. I don't see it escalating from here. And quite frankly, we're happy in a stable market, right? It means that not only are your sales relatively stable, but your cost part of the equation is usually more manageable and predictable as well. So stable market suits us just fine.
And most of us, really. I mean, if we look at less than a month's worth of supply of homes right now, that's pretty bad. And so that kind of brings me, so now that we're in this kind of market, does that make your decision-making of who to work with and what projects to take on a little bit different than it did, let's say, 2 years ago or 3 years ago? Yeah. Or you pretty much have the same formula?
No, I mean, it's the same formula at a high level. I mean, obviously, we kind of take a look and try to assess where we are in a cycle, or looking ahead 6, 12, 18 months. And to a large degree, that informs sort of what type of projects that we'll do. I think right now we see a lot of value in projects that are a bit longer in length. It's a bit funny when we talk to investors and they're new to the firm. And I think this is more of a function of just trust with a new client, is that the first question is, show me your short projects. Like, show me your 2-year deals or your 3-year deals. Well, those exist if you're buying a land that's already approved. Right? Which means that a lot of that value that you create has already been taken off the table when you're buying a land that's fully approved. The ones that get us excited as a firm are ones that are 5, 6, 7, maybe 10 years in length. You might need 2, 3, 4 years of planning work to go through before you can start a sales program. But the benefits there are many. You have a much lower price point on your land when you're buying it at that far out from the approvals. You give yourself more of a margin of safety if the market changes or ebbs and flows. And if the market pulls back on a 3-year project, that's going to be much more noticeable than if it pulls back on an 8-year project. At the end of the day, you might be right where you started anyways. Right? So I think to a large degree, it does influence where we want to deploy capital, and whether we want to look more for margin of safety and mitigating risk, or more for swinging for the fences. At the end of the day, we've always been more of a conservative mindset, which is, we want to buy land at a great value, give ourselves a lot of levers at our disposal, and set ourselves up for success. Right.
And I think that brings me to one of my final questions, is that from the time that you're approached to the time that a builder actually gets it built, from conception to here we go, here's the keys, how long does that take here in the GTA?
Yeah, it depends on the type of development that you're doing, right? So if it's a mid-rise or a high-rise condo, probably looking at 5 or 6 years, from sort of inception through to occupancy, and from our point, exit and profits back to our investors. If you're looking at, again, like a longer-term kind of master plan community, those projects are actually going to have multiple points of distribution. Let's say if you're doing 500 homes in Durham region, you're not going to sell 500 homes, then go ahead and build 500. You're going to divide that up into multiple phases, which means that project might be 8 years in total. You might start seeing that first phase finish up in year 5. So you'll cycle out in multiple distributions. But yeah, in the GTA, again, condo projects probably about 5 or 6 years. Infill sites, depending on how many units that might be, kind of call it 3.5 to 4.5. And longer sort of master plan communities, 6, 7 plus.
Right, and years ago, when I first started having the conversation, it used to be 10 years.
Yeah.
And so they've shortened up the time period and the time frame, which is amazing. So it's good to know, and Barry, I thank you for being here today. It's good to know that we as homeowners have choice.
Sure.
So if we don't want to sell our home to buy a bigger home, or to go out and buy a rental property, or to go out and buy new builds, then here's a third way of investing in the real estate market, which is very popular, because the question that I get almost every day is, when is the market going to crash? And when we talk a couple of points kind of flat, and I think, for what I see, I think a lot more inventory is going to start coming out.
Yeah.
And I think we're going to be seeing more of a flattening happening, and then prices are going to just subside slightly. Sure. I don't think they're going to go down. I think interest rates are too inviting. And like you said, we don't know how the market's going to, we don't have a crystal ball, but we do know that we live in an amazing city. So if you want to not sell your house, not buy a pre-existing rental home, or not buy pre-construction, well, then you can go to somebody like Barry, and Barry the person, not the town, and that could be a way, because values are so high right now of your own existing home. It's a good time to take equity out. And it's actually a fabulous time to take equity out right now, because rates are very, very friendly. And so this could be a very safe way of furthering your generational wealth. So I would strongly recommend either reaching out to us or to Barry so that we can connect you together, because I think it's an important conversation to have. Barry, thank you so much. I really appreciate you coming out today.
My pleasure.
And you've been watching. If you've learned one thing, that's all I care about. But thank you so much for watching the City Savvy Show. I'm Kristan Erner.